Good afternoon. This is Tom Alexander. It is Sunday, November 6th. It's about 12:28 p.m. Eastern Time in beautiful Charleston, South Carolina. And we have big events this week, as usual. We have it seems like it's been one big event after another. Up until this point, it's been centered around Fed stuff, economic reports. We do have CPI out this Friday, but the big event is going to be the midterm elections on Tuesday, and then the ensuing noise the next day or two around that. So just be aware that will be the current narrative. Do me a big favor and like the video. Please subscribe to the channel. It's very helpful. This is the video addendum that I do every week to the written report. If you are not receiving the written report and you want to receive the written report, send me an email to tom@alexandertrading.com and I will immediately send this one to you, and you will be on the list to receive future at a minimum weekly reports. And I do the occasional special update as well. Okay, let's look at something more important than my face. Okay, here are the four primary U.S. trading indices, the cash markets. We have very disparate structure here from an auction market perspective. We have the NDX that has tested, or is testing, I should say, the October lows. And then we have the Dow that's just had a little bit of a two-day blip off of an incredibly strong ramp higher, and then the SPX, the S&P 500, and the Russell 2000 between those two levels. So the intermediate term trend of the market is still, in my mind, up for grabs. Who is going to win here? Is it going to be the bears as represented by the NDX, or is it going to be the bulls as represented by the Dow? We don't know. What is important from a trading perspective now will be last week's lows, either Friday's lows or, in the case of the Dow, Thursday's lows. And then back to the upside, it is the recent highs in the respective indices. That's the bottom line. I don't do predictions. I don't get into predicting the future. I am a trader. I try to read price action and respect and follow price action, and I suggest you do the same. So we have enough noise coming next week, the proverbial exogenous events that any prediction anyone is making could get blown out of the water depending on what happens with the elections, and then the ensuing messiness that inevitably will follow. And then we have, again, CPI on Friday and more Fed-driven stuff. In the meantime, again, it's as simple as this. Last week's lows are important, and the recent highs, pivot highs in the indices are important. That's the bottom line. Okay, looking at the technical situation, I landed on VIX, so we'll talk about VIX. I have been saying for weeks, and this is not any sort of unique view, but I think most traders realize a declining VIX is positive for the market. VIX has been declining from the recent peak at the October lows. It still has a ways to go to get down to even the 20 level. The 20 level has occurred near tops since the top back in January. If we were to get down to that 20 level, it'd be a really interesting time to take a look at what price is doing and where VIX is at that 20 level. Certainly, there's nothing magic about VIX having to go back up from 20, but that has been an important level in the bear market since the high back in January. Okay, looking at breadth. And I could make a bullish case, I can make a bearish case. The bullish case to me is that price continues to hold up relatively well. And this, based on NYSE data, this market is very bid. We have not had a negative 2,000 breadth reading since the furious number of breadth readings, the prolific number that occurred into that October low. We had just an extraordinary cluster of negative 2000 breadth readings. This was capitulation like. Everybody was wanting to see this limit down day or two that exhibits capitulation. Well, sometimes capitulation manifests itself in different ways. Hindsight is perfect, I realize that. But this was a pretty extraordinary run of negative 2000 down days. And I guess in hindsight, it was also relatively bullish that price could really not do very much damage considering the degree of selling in NYSE advancing issue. So we'll see if we get a negative 2000 breadth reading next week, or if this market just screams higher following the midterm elections into Friday and the CPI. So that's sort of where we are from a technical perspective. Let's take a look at a few other markets that we like to follow. Obviously, everything is highly correlated now, and this latest and greatest risk on, risk off among assets. The dollar has been extremely strong. It is making signs that perhaps it has formed a top of significance. It is making lower lows and lower highs. That is very important to note. It's also making lower lows. It has this wedge thing forming. This 109.35 level is very critical. I would favor short trades personally against Friday's high. Let's take a look. Now, gold, of course, is the inverse of the dollar. It trades against the dollar, and it is ramping higher. Gold is interesting to me because from an auction market perspective, structural perspective, it has tested this level on three occasions. This is the strongest up day we've had in, gosh, months. I haven't gone back and really parsed into it, but a long time. I would favor longs in gold. And there are a couple of guidelines here. This is conviction. You might favor longs against the 50% retracement level of Friday's range, et cetera. You guys that are members with us understand that concept. And I've shown example after example after example of how that works in all time frames. Let's look at notes and bonds, which are basically identical patterns. And the interesting thing about notes is that they're holding this October low. And I put a 30-minute chart in the written report. So there is a good long trade setup against that 30-minute level that is in that chart. Clearly the trend in bonds and notes is down. So that would be in an intermediate term time frame, a counter trend trade that I typically don't like to take except in special situations, and this would be one of those situations. So we'll be watching notes carefully. What else? Crude. You got to favor longs in crude. Crude is, you have higher highs and higher lows, and you have this migration of value higher. Those of you that understand bar charts, market profile, auction market concepts, this is that Gaussian shape. You had another one here. It's a little bit of a false breakout trade, but you have a lot of volume in this area, and now you're breaking to the upside. So you have a migration of value just in terms of higher highs and higher lows. You also have a migration in value in terms of how you view value from an auction market profile perspective. Guys, hope you have a great rest of the weekend. Hope you have a wonderful week. I will talk with you again soon.